Hello everyone. For those who follow my channel, you know that my primary focus is on SOXL. My go-to weapon is momentum, buying high and selling high, or chasing profits in the market's frenzy and panic. My automated strategy is like a Formula One car, built for extreme speed, capable of delivering huge returns when the trend is clear. But here's the problem. An F1 car can only perform on a professional racetrack. What happens if the market turns into a rugged mountain road or congested city traffic? This is the fundamental reason why I'm rolling out a major upgrade to my trading system today. A momentum strategy, simply put, is based on the idea that what's strong gets stronger and what's weak gets weaker. When the market has a clear direction, whether up or down, this strategy is incredibly effective. But the market isn't always like that. There are times when it gets stuck in a state of indecision. It doesn't go up, it doesn't go down, it just chops back and forth. We call this a ranging or consolidating market. In a market like this, a momentum strategy gets repeatedly whipsawed. The program buys into a breakout, only for the trend to reverse. It hits the stop loss, only for the price to rally again. It's like having an F1 self-driving system navigate city traffic. All it does is rapidly accelerate and then slam on the brakes. Not only does this fail to make a profit, but it constantly erodes capital through transaction friction. This is the Achilles heel of a pure momentum strategy, and it's a weakness that I, as a system designer, must address. To solve this problem, my system needs a completely different approach, a strategy module designed specifically for ranging markets and pullbacks. And my answer is mean reversion. So let's take a deeper dive into the core of this new module, mean reversion. What is it exactly? And how does an automated system use it to its advantage? First, let's break down the name. The mean can be thought of as the center line of a river. It represents an asset's fair value or average price over a period. And reversion is like the physics of a spring. Imagine stretching a spring. You pull it down away from its equilibrium position. The harder you pull, the more potential energy it stores for the rebound. The moment you let go, it doesn't just return to its original position. It might even overshoot to the upside due to inertia. Market prices behave similarly. Driven by collective panic, a price can be irrationally overstretched to the downside, far below its intrinsic average value. A well-designed mean reversion strategy is an automated system programmed to precisely identify these moments when the spring has been stretched to its limit. So what kind of signals does a typical mean reversion system look for? These systems don't rely on feelings. They rely entirely on cold, hard data and probabilities. Typically, they are programmed to monitor several key indicators simultaneously, looking for a moment of confluence. Extreme statistical deviation. The program calculates the asset's moving average over a specific period, that center line of the river, and then monitors how far the price deviates from it. When this deviation reaches an extreme value that is historically rare, the first alert might be triggered. Quantifying panic. The system analyzes the market's selling volume. Is it just a few scattered sell orders, or is it a massive panicked sell-off? When it detects an abnormal spike in volume combined with rapid selling velocity, it's often a sign that market panic is peaking. This is a second key signal. Exhaustion of downward momentum. The program also analyzes the acceleration of the decline. Even if the price is still falling, if the speed of the fall starts to slow down noticeably, like a ball rolling down a hill meeting increasing resistance, it's often a precursor to an imminent reversal. When all these conditions, and sometimes other, more complex indicators, are met at the same moment, the program makes a judgment. The spring has been stretched to its limit. The probability of a rebound is far greater than a continued decline, and it's time to enter. The biggest advantage of this automated execution is that it's free from human fear. It doesn't hesitate when the market is at its bloodiest and everyone is screaming, "Sell!" It simply follows its pre-programmed rules that have been validated by extensive historical backtesting, and executes the buy order calmly and decisively. Then, as the panic subsides and the price snaps back toward its mean, the program automatically locks in the profit, completing a successful panic capture. Therefore, This mean reversion module I'm introducing is essentially embedding a professional contrarian investor into my overall automated system. It perfectly complements the trend-following momentum strategy, allowing my entire system to automatically find opportunities, whether in moments of market euphoria or panic. So why did I choose QQQ to execute this new strategy instead of sticking with SOXL? This is crucial, and there are 3 reasons. Stability and reliability. QQQ represents 100 of the world's top tech companies. Its price action is far more stable and predictable than a single sector like semiconductors. Its mean reverting characteristics are stronger and more reliable. Using it as the underlying asset is like installing a high-performance set of brake pads on my entire trading system, making it run more safely. Systematic risk hedging. My SOXL momentum strategy is the spear of offense, pursuing high risk for high reward. The QQQ Mean Reversion strategy, on the other hand, is a robust shield of defense. My entire trading architecture is designed for these 2 programs to run simultaneously, complementing each other. In a trending market, the momentum strategy will automatically seize opportunities. In a ranging market, signals for the momentum strategy will naturally decrease, while the conditions for the mean reversion strategy are more likely to be met. This isn't a manual switch I make. It's an automated, all-weather combination of strategies designed to smooth the equity curve of the entire portfolio. Completeness of system design. The core of designing a trading system is to overcome human weakness. If a system is only effective in certain market conditions, I, as the designer, would inevitably feel anxious during other periods. By building an automated system that incorporates 2 core logics, momentum and mean reversion, I solve this problem at its root. I no longer need to judge the current market and choose which strategy to use. The system identifies and executes automatically. This system-level completeness is what gives me the confidence to remain objective and calm as a systematic trader. With a prepared system, there's no room for panic. So, by launching this new QQQ Mean Reversion series, I am not abandoning my original momentum strategy. Quite the opposite, I am making my entire system stronger. It's like I've built a robotic boxer. Before, it only had a devastating right-hand power punch, momentum, but it could be countered in certain situations. Now, I've programmed and installed a flexible left jab, mean reversion. My SOXL momentum strategy and my QQQ mean reversion strategy, one for offense, one for defense, one seeking high returns, the other seeking stability, are designed to work together as a single, automated, all-weather trading system that operates without manual intervention, coordinating automatically based on market conditions. Starting today in this new playlist, I will document the complete thought process and execution of every single QQQ mean reversion trade, fully transparent, win or lose. If you want to witness how this spear and shield automated combo performs in the real market, be sure to subscribe to my channel and follow this brand new series. Let's explore the infinite possibilities of systematic trading together in the waves of the market. If you got even a little bit of help or inspiration from this, I'd be so grateful if you could subscribe, like, and leave a comment. Your support means a lot. See you in the next video.